Good afternoon. It is Friday, 4:33 p.m. Doing a quick report for clients just to kind of show them what's going on. Some tricky price action this week, not pretty price action. Got to be real about that. Going to be objective and show you what I'm seeing, the trades that we made early this week. Again, it was a shortened week, so no Monday. That was off. That was a holiday. It's amazing how these short weeks have been really difficult recently. But realistically, seasonality, this plays right in trend. This could be ugly if it continues to near the end of January. So I'm being very cautious. I want to show you what I'm seeing here. Okay. So we're going to give you the pros and cons. There are some good things that I'm actually seeing here. Nobody likes to see this. It actually looks like it's plunging, and it did. It was a bad week. But it's almost too orderly, meaning I want to see the fear, like the VIX hit a 30. I want to see, and I'll show this to you, I want to see the VIX hit 30, which is a lot of fear. I want to see the put-call ratio get out of the 60s. Can show that to you as well. We're getting closer, though. We're starting to see downgrades when everything is already plunged. That's a good sign. We're starting to see in the news, hey, we're going to see a 50% decline. Yes, things are overpriced, but you have to also keep in mind that what we're seeing now is much more normal than what we saw last year. This is the biggest decline we saw in the entire year last year. So what I was saying last week in the video is this is not going to be a 2021. It doesn't mean we won't have great gains this year. It just means it's going to be more tricky. It's not going to be high flyers just explode. They have tanked. They've been in basically a recession. Now, it's interesting that we're starting to see areas like China that have been in a depression improve a little bit. Now, they did ease rates a little bit, which is good. But here's the deal. Some concerns, as we know, when the Fed pulls the punch bowl, meaning they are going to increase rates, they said they're going to do that 3 times, they're going to slow down bond purchases, that causes fear in the market. And that reprices growth stocks. Growth stocks are getting absolutely smashed. Okay, so the key levels, let's go over this first. I added on last Friday at 46.44. That's right here. This candle right here. Friday was a good close. It looked like it was going to test the 50-day moving average and really turn around. We've seen a lot of looks like this, as you can see, where it just took off from there. So I wanted some exposure. Well, come Monday night, futures tanked 2%. And so when I saw this, again, this was Friday, this is Tuesday, because Monday was off, holiday. We go all the way down to, I sold at 45.95. That's right in here. So I'm not by any means happy with this week because there were opportunities, but the overall trend is down. So I would rather keep more capital available based on the way that I have to trade. Again, I'm trading over $30 million. I can actually move the market. So I want more cash available for when I think we could actually bottom. I have not added anything after Tuesday. I'm thinking we are getting closer based on a lot of metrics. We could hit 43.83. I think if we get a red open on Monday, we could really see a pounce here. There is a gap that is up here. I have not signified that yet, but overall, 2 bad things. Rules that have been added since 2021. When you get a decisive close below the 50-day moving average, which was Tuesday, you're out, period. And that was a rule for me, and it saved me a lot of money. Now we're below the 200-day moving average. That, for many people, was an immediate sell. So this could go a little bit lower. If I get in, it's going to be kind of a trial at a big down day and probably sell the rip, or if it continues, keep it on. Right now, every dip at a key level has been bought, but it has been sold into. So you can see here, big dip, test the 5-day moving average, this orange line. Big dip, test the 5-day. Big dip, go a little over the 5-day. And this is today. We couldn't even get to the 5-day. So that's not good price action, okay? Got to be real about that. This doesn't mean we're going to die. We're in cash, so we're not going to lose any money. But I will have to add soon because these are getting very attractive. I mean, we're seeing, for example, like this is a nice little dip that I'm pretty excited that we're seeing early in the year. This is year to date, so keep that in mind. This is the biggest dip we saw all of last year. This is not 2021. This is going to be a different year, okay? We're going to get some concerns with interest rates rising and inflation increasing. Now, all of this will probably tame the Fed's conversation eventually. It might not happen on the 26th. The Fed has a meeting on the 26th. So keep open-minded because this could lead to good things soon. I'm still not seeing the fear, okay? So here's the VIX. Here is like a 5-year chart or something like that. You can see right around 30, a lot of times we begin to shift. This is basically a fear gauge. And this is often a good place to start adding some, okay? So I got to be real about that. In addition, what do you notice about SPY? And again, this or the S&P 500, this doesn't mean it has to get bought, but it is oversold. All the indexes, I believe, are oversold. So there's a positive. Like we're starting to finally see some fear. I want to see this above 30. I want to see a scare between 30 and 40, and I'll probably add some. And if a key level does not hold, I'm out. That has happened many times this week where we would go, like today, this morning, we tested 44.80, which was a key level, slammed down, went right through 44.60 and closed on the lows. So bottom line, right now, I don't want to be involved until a key level holds. If we see any change in character, that will bring in some buyers because we're at levels that are of interest to institutions. So we got to be careful not to be too negative at this time. So in short, we saved a decent amount of capital by getting it out at 45.95. Wasn't perfect. Again, here is my performance. Monday was off. This was what I was saying. Like, hey, this was not fun waking up to this. I had no option to get out until I was seeing very early in the morning. It was like 10:30-ish, I believe. And I just was not seeing any buyers come in, period. And that maintained that same price action the entire week. So I'm reading the tape well, got out at the time when I needed to, but it's just tough when you wake up, and I was obviously watching all night, but seeing that tank after looking like we were going to get out of a downtrend on Friday is just tough. You got to suck it up, make the right decision for that day, and move on. So tough week, but we did save some capital. We beat the S&P by 3.68. Still a down week. I'm not happy about this, but as you can see, that's where I sold. Collectively, the 20-week tracker, we're still positive, not where I want to be, but we are beating the S&P 500, which is not always the easiest to do in this environment. So there's pros and cons to everything. So another good thing that I'm seeing, you're going to laugh at this, but this is a good indicator. I received 5 calls from clients this week saying, what's going on? We're a little freaked out. Should I get in a guaranteed annuity? Which, no offense, I have no interest in selling a guaranteed annuity unless you are completely freaking out and give me no other option. I think there's better options, period. Just being in the market and sucking it up a little bit. I know I need to do better, no doubt about it. But when I see the same people call on the same day, we're close. That has almost been a great indicator for this past several years. It's funny. You might laugh at that, but the same people call about the same time, and so pretty close to a bottom in my opinion. but I'll follow price action. Okay. So price action is bad. Fear is close. Showed you the VIX. This is interesting. Okay. Correction to prior tweet. She had a tweet earlier. Bulls are leaving party. Spread between basically investors, bull and bear, the lowest, most bearish sentiment since July 2020. So again, we're seeing the fear that we want to see. That's a good thing. We're also seeing across many different ETFs, which means if an ETF is oversold or extreme oversold, think what individual stocks are doing. I mean, it's not pretty. I could show you individual stocks, but that's kind of a waste of time. It's not pretty. Like if an index is down 11% since the beginning of the year, individual names are down 20, 30. High growth areas are down 60 to 80. So as I've been saying for a long time, under the hood has not been pretty. Once the good names, like the Apples, the Googles, once those names roll over, we've got a problem. And that's where we are right now. So they will recover. It's just going to take some time. So don't expect your January statement to be pretty. This is going to take some time. But when there is strength, I need to press hard. I'm never going to time a bottom perfectly. It's going to have to be a slow process. But you usually get 3 to 4 opportunities a year of where there is some really strong strength, and you got to take advantage of it. So do not get too bearish here, because we're in cash. All of it is settled. We're ready to go. We just are waiting for buyers to actually come in. So overall, there's pros and cons. I think we are very close from a fear sentiment, but it's just too orderly at this point for me to add. I'm hoping Monday that we get a decent dip, take us a little more oversold. The VIX goes over 30. That could lead to some good things. One thing that I got to be cautious of is seasonality. Seasonality is not great until beginning of February. I'm very interested if the meeting on the 26th with the Fed could bring in some money. Meaning everybody's kind of freaking out ahead of time of this Fed meeting. We already know what Jerome Powell has said, but I think we're getting the fear out before, which happens all the time. You get the fear out before. Maybe this meeting has some more horrible news and the market goes higher. That's been a trend. So we might be getting the bad news out early. So no assumptions. Price action is not good right now, which is why I'm in cash. I wish Tuesday had not happened, but you have to deal with it. Are there opportunities each day? There are, but they're not holding. So I got to be careful to protect emotional capital as well, not to get in, because you understand these moves are happening in 30 minutes. You might get a 1% pop, but it's happening in 30 minutes and tanking. For 30 million, that's not exactly easy to make sure every trade goes through. So that's not an excuse. I'm just being real with you. That's how it works. I got to make sure that there's nothing that happens. Otherwise, I can't sell it all. So looking for a little more strength for a little longer periods than 30 minutes. That's a summary. So overall, I'm excited about where we stand. I'm actually optimistic. I think we're very, very close. 43.83. I'm very interested to see if we touch that. This is the big one, 43.55. This would be another very good level. But objectively, we lost the 50-day. That's a sell. No questions asked. Now we have much better opportunities of, even if I added here, higher probabilities of being positive for the year, even if I never sold to the end of the year. If I added here, I'm pretty confident that we'd actually be positive for the rest of the year. It would go through pain. I try to avoid that for you sometimes, like right now. But do not be comfortable in cash. I've gone down that train last year because I was seeing, some stocks going down 20-30% while the indexes were fine. So it's going to be a tough year, but I think we are in a decent spot. It was not. The last 3 weeks have been brutal, but I'd rather see this dip early in the year so I can work through it. So keep your emotions in check. Remember, if you're coming to me saying I lost $25,000 within a week, you have to understand the percentage. You're going to really struggle emotionally if you're basing your performance based on a dollar value. You're never going to grow your account. A millionaire, $25,000, that's 2.5%. That happened today. Okay? Not for us, but for the market, that happened. So you have to get comfortable with understanding percentages and what that means from a dollar standpoint. We've been spoiled for years. And this is a normal correction. We're not even in a correction yet. The QQQ or the NASDAQ has. So hang in there. We will improve here. We're in good spot. Hang in there, guys. Let me know if you have questions. Like I said, there's pros and cons. The fear is there that I want to see. Just a little too orderly at this point. So hang in there. We'll be all right. I think if we can get through next week and survive, and truthfully, most of you just ignore your accounts, you'll be better off. But overall, we beat the S&P. We continue to beat the S&P, which is our benchmark. I don't like a losing week, but this one I had zero control of because it happened overnight. You got to make the best decision on that day. So I'm going to quit rambling, but thanks for your trust. I know it's not, even last year was not a great year because I got stuck in some bad decisions. But now our new strategy for the 20-week period that I've implemented, it has really helped. And I think it's going to really help us through the rest of this year. So thanks, guys. Have a great weekend. We'll be fine. Ignore the news. You're going to hear it for a long time. You're going to hear nothing but negative news. That's actually a good sign that we very well could be close. You're going to hear nothing but lower levels. We're going to go to 4,000. We're going to go to 4,200. That's all you're hearing right now. That's close. You're getting downgrades after stocks go down 23%. That's stupid. No offense, but that's stupid. You don't downgrade a stock when it goes down 23%. You're just asking to lose. Okay, so keep in mind that the market works that way. Once something gets so negative or there's blood in the streets, money comes in out of nowhere, even if for no reason. There was no reason for today's sell-off. None. It's just people selling, and that leads to more selling. So you got to be realistic about the price action, which is what I did on Tuesday. I don't like it. I think it will bounce, but we're not there yet. And until I see buyers come in strong and hold a key level, got to stay in cash. So following rules, working well, we'll be fine. Thanks, guys. Have a great one.